I do want to welcome you all on this webinar today. My name is Tom Randall. I'm the National Marketing Director for Golden Care, and we're really excited about today's webinar. We've got our friends over there at AIM out in Washington, and Golden Care, of course, is here in Minnesota. And we're really excited about this annual call that we do. We call it our year-end industry updates. We're into 2020, running full gear, of course. But we are excited for today's webinar, and I want to let you know a little bit about the intros of who's on the phone today with us. But before I do that, I do want to get some housekeeping done. You will get the slides of this presentation. There's only a couple slides, but we'll get that out to you afterwards as well. And my main thing today is to let you know, as you listen, remember that AIM and Golden Care are here to help you. We specialize. We are Integrity Long-Term Care, and we specialize in helping agents like you when you're out in the trenches really have some success helping people. I heard a stat the other day from Ken Weichel from AgeWave talking about of everybody who's age 65 and older today on the earth, that represents 2/3 of the people who've ever been age 65 plus in the history of man. So there's a lot of seniors out there who need our help, and we've got all the products to help you, from our traditional long-term care and hybrids all the way down to literally a no underwriting type product. So we can really help people of any health, and we want to be there for you to help. That being said, we got a lot of good stuff, so we'll jump in, but I do want to remind you, we got a fun little raffle today you heard about on the intro, or the invite, excuse me, and we have 3 Amazon gift cards that we're giving out today. And I'm glad you have to be an attendee, so $50, $100, all the way up to $150, so 3 prizes. The way you do that is you grab that little computer in front of you called your iPhone or your regular mobile phone, text WIN, W-I-N, to that number, 89800. Text just the word WIN. And once you do that, you'll be in the raffle, and you don't have to worry about it, but do it soon, because we're going to do the raffle drawing right away, right at the end of this presentation today, and I'll announce the winners today as well. So make sure you do that. We'd love to have you have a chance to win one of those dollar amounts. That being said, I'm really excited to introduce today to our moderators. I'm a little frazzled, as you can tell, because I got disconnected on that. But anyway, I got Dennis Reiner. Dennis is a friend of mine. He's worked 35 years experience in the field. He's worked with me. I've been here since '97. He's been with Golden Care and AIM since '98. Dennis is literally one of the most sought-after speakers in long-term care out there. He's trained countless thousands of agents over the years. He's done 2,500 plus workshops. Most of you probably already know his name, because Dennis has really worked hard to help the agents of Golden Care and AIM be successful out there and grow their business. So Dennis is going to be kind of the moderator, and he's going to kind of work with Jesse and ask him some questions and have a conversation today. And Jesse is a man who needs very little introduction at all. He's the executive director of the American Association for Medicare Supplement Insurance and of the American Association for Long-Term Care Insurance. I've known Jesse for years and years, since back when he started in '98 as well. He's become really just a super well-known, nation's leading expert in this industry, and he's going to share a wealth of information with you today. And the nice thing about Jesse is that he really focuses on the awareness and advocates, and he's out there supporting agents like you in the trenches as well. So we're super excited. Thank you, Jesse. Thanks, Dennis. I'm going to just turn it over to you guys and let you go after it, and at the end I'll jump back on. And in the meantime, remember, for those of you who just logged on or missed the first time, make sure you grab that cell phone, text in the word WIN to 89800. That being said, I'm going to turn it over, and I'll be quiet, and you guys go after it. Thanks, guys.
Hey, thanks, Tom, and thanks, Jesse, for joining us. I always appreciate Jesse, because he's always direct and he tells it straight. So, Jesse, as you know, we got a full agenda today, and there's a lot of items that we want to cover and a lot of insight that we want you to share with our agents. And so I thought I'd just jump in and maybe start at the top of that list. I won't go through each of the points. Those of you who are on the call can actually see what we're going to cover today. And so I think the first question that we often
Hey, can I interject for 30 seconds?
Yeah,
and
sure.
I'm going to give a quick plug to the folks who are listening or the folks tuning in for recording, especially if you're in the Midwest and in the Chicago area. You guys introduced me. I now run both the MedSup and the Long-Term Care Trade Group. The MedSup conference is taking place in May in Northwest Chicago, in Schaumburg. And what's really unique about this is that it's a huge conference, 124 exhibit spaces, but we open the doors for free absolutely free on the first day, on May 13th. So anybody who has interest in just coming and meeting with the insurers and meeting with Integrity and all the FMOs and all the lead people, you should go to Medicare Supp, S-U-P-P, so MedicareSupp.org. Click on the conference tab. You can see the info for the full conference, but you can certainly see the info for about the free day. So that's free is really something that's so rare in this world, and free, that's something of a real value. It's a great day. Anyway, now let's get focused on long-term care.
Thanks, Jesse. I attended last year's Atlanta conference, and it was fantastic, and we do have a lot of folks on the call who do cross over and sell in the senior marketplace, so I'm sure they're going to be very interested in that invitation for the free day. Thank you very much.
Good.
I was alluding to the question about what agents often ask us about plan design and what they're seeing in the marketplace, what you're seeing in the marketplace as it relates to sales. And we know that agents are selling traditional long-term care, hybrids, life with LTC, annuities with LTC, but with respect to just what you're seeing in terms of in 2019 as far as average age, average monthly benefit, I thought we'd just kind of start off by laying the foundation with some of what is being sold today, and then maybe you can address, Jesse, after that, some of the add-on riders like inflation and shared care and so on.
Sure. I mean, we do gather data, so not much has actually changed. Surprisingly, not much has changed. The big difference is, and I'm a realist, certainly we're no longer in the heydays of traditional long-term care insurance where 750,000 individual and group policies were sold in a year, and you had the federal plan enrolling 250,000. The most recent data shows that about 50,000 people have bought a traditional plan. There's no hard and fast rule about the linked benefit. My estimate is that it's a couple of 100,000 of those policies that are sold a year. Let's focus on traditional. As I said, not much has changed. The average age is still about 56, 57. The average annual premium that people pay is still about the same, about $2,500. And what that tells you, now the costs have gone up quite a bit. So that, $2,500 buys less of a benefit today than it did, even a few years ago. So, but that will tell you what I always say is that the market for long-term care insurance is very defined. It is not everybody. It's a very finite audience, and they are very typically price sensitive. So, they're still buying what they used to buy, an average monthly premium, an average monthly benefit of about $4,500, an average benefit period of between 3 to 4 years. And I think to help agents, I for years advocated what I called the good, better, best approach to selling long-term care insurance, meaning that in my estimation and in looking at all the data that we've gathered over the years, some coverage is always better than no coverage. And typically, once you approach people that way, with the fact of why some coverage is better than no coverage and how it's also more affordable, they will pick a middle-of-the-road policy. And that indeed seems to be what's happening today.
Jesse, do you think as a result of that, because you said not much has changed, is there some situations, and I know it could be based on goals and objectives of a client, that we're seeing, because inflation as an add-on benefit is where those costs have really changed and with the carriers over the years? Are we seeing more foundation plans where people are selling, perhaps more monthly benefits with no inflation, or do you think things are still consistently, the majority of sales are still comprehensive and about the same as they've always been?
The majority of sales are about the same as they've always been, because it comes back to affordability. If you go in, especially It depends on the prospect. We get a lot of calls from consumers at the association, and a lot of times it's a consumer that's checking up on a particular company that their financial advisor is recommending. Well, if you're a financial advisor and you've been working with the client for 10 years, 5 years, whatever the time period is, and you've developed their trust and you know their portfolio, certainly those sales are going to be bigger. It's not uncommon to see, a linked benefit product where, it's a single premium and each person's putting in $150,000 because the financial advisor controls the sale, knows the client's, background, has that established relationship and trust. The average rank and file agent who is working off a lead and talking to a client for the first time, you are facing somebody who, and nothing has changed there over the 20 years that I've been doing this, and certainly over, the last 5 years that we've been, pretty actively, spending much more of our time dealing with consumers. Nothing has changed there. The client doesn't know you, the producer, from anybody else. And frankly, they don't trust you. And frankly, they also can go online and can read all the horror stories about rate increases and about all of that. So in today's market, if you are still trying to sell very rich policies, and if you're not addressing a lot of the misconceptions out there, I don't think you're going to make the sale, frankly. And so I've felt that way a long time. And so it doesn't surprise me that the average, annual premium is still about $2,500, what it's been for all of these years. That's about the limit of what people will pay.
Yeah, that's good insights, Jesse. And I think it just helps the agents out there to understand that, as you indicated, a foundation plan of some coverage is better than, trying to sell the Cadillac plan if it's going to, have people, in essence, balk at what those premiums are. And, back to the question about increases, we'll talk about that in just a moment, but I know that even despite increases, LTC persistency has remained extremely high. Speaking primarily with traditional long-term care, the data is a little bit newer on the linked products and the hybrid asset-based products. But can you talk a little bit about kind of the whole correlation with claims and the claim data and what it's telling us based on individuals and carriers? And I think we may have a visual that would support that.
You do. So we'll talk about this, but what the people who are looking at the slides or who might be listening, I want to point out the website address there, and I'll tell you why I'm doing that. So in 2016 or 15-16, we stopped printing the long-term care source book. Which was an incredible compendium of our research, of other research. It was just the go-to resource for the industry. But so much has changed in the industry that it wasn't financially viable to print it anymore. I still continue to do research. I post it online with some really nice, pretty graphics that you can see, that others can see, that people can kind of, I guess, if they're smart enough, figure a way to pull them off. And the reason I said the website, the AALTCI.org/LTC-Facts-2019, there's a link on the homepage under the Statue of Liberty image. But this will get you to various studies and data that I've posted throughout the year. And then we'll start a new page eventually for 2020 Facts. But to answer your question, what's happened in long-term care is not a surprise to anybody. The insurers always knew and expected that they would be paying claims, and they expected and were prepared to pay an increasing number of claims every year. That's the way the business is designed to be. And in fact, years ago we did a study, and I think it was like by 2030, whether it was $20 billion a year, I mean, the claims payouts are going up. The number of people on claim increases, and the benefit dollars being paid out increase every year. That's not a shock to the insurers. What was a surprise, and the reason that you're seeing the rate increases on the older policies, and that's really important, and I'll share a message that I share with people. Unfortunately, it's hard to validate, but what changed was the lapse rates. The companies expected, when they wrote and designed the policies, basically starting the formulas in the 90s and whatnot, they expected about a 4% annualized lapse rate. More people lapse in the first and second year, and then it slows down the longer people have it. But over a 20-year period, they would have expected 80% of the policies will have lapsed. The reality is that the lapse rate is 1%. And that's what put these bigger insurers into a bind. If you think about it, if you sold 100,000 policies and you have 80% of them go, well, you're only left after 20 years, which is when people are going to start going on claim, with 20,000 policies. And about a third of them will go on claim. So about 7,000 claimants. If what really is happening is only 1% of policyholders lapse, at the end of 20 years, you have 80,000 policies still in force. Still a third going to go on claim. So now you have 26,000 claimants, not 7,000 claimants. And that was one of the biggest issues, that and inflation protection. Nobody expected, historic low interest rates would last this long. You can't predict that. And even if you could predict it in a competitive market, you couldn't price for it. So when you have that combination, what happened or has happened to the older policies is not surprising. The message that and when I'm talking to reporters or even when I'm talking to consumers, the message that I share with people is that with long-term care insurance, the past doesn't equal the present or the future. And what I mean by that, and I wish the companies would sort of, rebrand, at some point Boeing is going to have to rebrand that plane because they're sitting there and they're not just going to, turn them into scrap. So they're going to have to rebrand that plane, and the one that had 2 crashes, and, come out with a new name, a new number. It's all new and improved, and prove that it's safe. Well, long-term care insurance, unfortunately, isn't doing the same thing. It needs to. Because here's the deal. On the policies that are issued and written and approved today, 1, the insurers are using the correct and the current lapse assumption. 1%, typically even actuaries will tell you a little bit below 1%. And so, yes, I guess you could, say that nobody would ever drop the policy, but that's not going to happen. And they are using the current interest rate. So I fully believe that the policies that you are writing today have almost 0% likelihood of a future rate increase. Unfortunately, you can't get, there's no study, there's no group of actuaries really, I'd love to work with a couple that would support the association and giving us some, basis to go out and give that good note, because that would make people feel well. But you can kind of, if you explain what happened in the past and why the newer policies have taken that into account, then I think you can overcome that concern.
And that's great advice for agents to gain confidence because as you know, maybe we're preaching to the choir here, or maybe it's time for some of the agents listening in today to rejoin the choir, because many agents used to be very active in the past, but the increases kind of was a stumbling block that many of them couldn't get over, and you've just given a great, very succinct explanation. And that kind of comes back to the importance of addressing the need for planning, for LTC planning, and perhaps, you could share maybe some further advice about why agents should be having that conversation. And then what we'd like to talk about is afterwards is the maybe still the value proposition that is still there with traditional long-term care.
Let's talk about the value that's still there with traditional. So, I love everybody. You have to. And to ignore the marketplace and what's going on is silly. You won't be successful. You have to take reality into consideration. So what's really taking place, and then the value proposition. The reality is that there are very few insurers out there. There's no marketing for long-term care, so to speak, the way there was, a decade ago. It just isn't. And so there is less awareness. Where there is awareness is for the linked benefit products coming from financial advisors. We are, everybody understands we're seeing stock markets hit new highs. At the same time, financial advisors' revenue is dropping because, well, it's just the nature of the business. You can go to Fidelity and Vanguard, and everybody's advertising, come with us, no load funds, all of this, trades free, et cetera. So they're losing income. One of the last ways that a financial advisor can make income is selling insurance products. And so many of them are, and now they're talking to their peers who are having success, so many of them are recommending linked benefit products. It's a very simple 5-minute, moving of assets. Mary and Tom, look at your asset pool. It's grown so nicely. We started with $750,000 and it's now worth, $1.7 million. Your retirement is well in tune. There's one thing that nobody has addressed, and that's because nobody wants to talk about long-term care. There's so much bad press out there, but here's a product that if you don't use it, you don't lose it. It guarantees you this amount of long-term care if you ever need it, blah, blah, blah. End of sale. Should we make this transfer and do this? And yeah, we've trusted you. Look at this gain. In 2008, nobody wanted to call their clients, but today they have good news. And so the money is moving. And you need to understand that if you're a traditional producer, that's what's happening in the marketplace. And the chances, while typical agents and brokers are selling linked benefit products, I'm sorry, you're going to be hard-pressed to take a sale away from a financial advisor who's got the trust of the client and controls the assets. So that leads me into how do you approach the market and the value proposition for traditional long-term care insurance? If everybody is out there really talking about linked benefit products, the only way I believe to change the conversation is to look into, say, the following. First, yes, linked benefit products are really a great option. By the way, did your financial advisor tell you that you're buying life insurance? And typically, the word life insurance never came into the conversation, and so that is one way to create some awareness and doubt that, in terms of why do you, Mary and John, at 67 years old, need life insurance? Is that something because the insurance company is not giving this away? Now, yes, there's a lot of negativity around traditional long-term care insurance, about rate increases, about companies coming and going out of business. Let me deal with those in a second. But let me tell you that the primary benefit of traditional long-term care insurance is that it gives you the greatest leverage for your premium dollars. You could get your money back if you wanted to. We could add that on, but nobody really wants that. It's too expensive, and so you're paying for it if you buy the linked benefit product. They're not giving it to you for free. Only our conference in Chicago is being given to you for free. And by the way, it's free because the exhibitors like Integrity are going to have a lot of booths there and all of that. So even we aren't nobody gives away stuff for free. Traditional long-term care insurance gives you the greatest leverage for your premium dollars. And like all insurance, if you really think about it, you don't want to use it. You don't buy homeowners insurance hoping that your house burns down in a big fire in California and all of your personal property is destroyed, but boy, you got a check from the insurance company. Aren't you smart and lucky? That's number one. Number two, then you go into the fact of what I said. Yes, the two concerns that people have, which are not addressed by the insurance companies, I wish they were, are rate increases. The past doesn't equal the present or the future. I can explain to you why those older policies that have provisions and options and features that are not current today, those are the ones being hit with the rate increases. New policies have very little risk, I believe, of future rate increases. And the second thing is companies going under. Yeah, people worry and hear about that. The truth is, in every state, there is a state guarantee fund. Insurance is a wacky system, folks. We all know that when you go to the bank, $250,000 is the FDIC limit. It's been drummed into us. Make sure that your bank has FDIC or your credit union and you understand what the limits are and what the risks are, and you are protected. With insurance, there is exactly the same thing with the state guarantee systems. But insurers and everybody is basically prohibited from saying anything about it. Ooh, we hide this under the rug. It's insane that exists, but that's the way it is. But tell them your policy, know what your state limits are for your particular state. Your policy has guarantees, just like the FDIC. If indeed an insurance company ever goes under, but that very rarely happens because of the way they reserve and have money and have assets. But go look up State Guarantee Fund. Here's what it is. Look up under Department of Your Insurance, etc. I think if you take that approach in communicating with consumers, you'll be conveying information that they haven't heard from anybody else.
Thanks, Jesse. That's a great explanation, and I think it helps agents to, obviously they have to size up what is in the best interest of the client, as you indicated, their goals and objectives and their needs, and it's not a one-size-fits-all. There's a place for every solution, and I think there's still a great place for traditional long-term care, and you just illustrated why. We've got time for just a couple more questions, and then we'll ask Tom if there's been questions that have been submitted that we can open it up for questions if we have time. But I wanted to address kind of what's changed over the years, and that is this topic of underwriting. And I guess that could be a webinar in and of itself that we could spend a lot of time. We know that pre-screening today, health-wise, is really important, and I'd like you maybe to address just underwriting. I don't know if you have any information that provides, what declinations have looked like historically or currently, and also maybe just one other point on this, Jesse. Maybe just why these other alternative solutions today have become so popular, like the short-term care and some of these other standalone home health care plans and so on.
Okay, so let's deal. So back to that other slide that had the website address. We actually just posted a chart where we got data from a couple of, so that go to the AALTCI, LTC Facts. You can type the whole thing in, or as I say, if you just go to the association's website and then scroll down under the Statue of Liberty, there's some banners, and then there's some type words that just say, data from 2019. So we compiled some data that talked about declinations by age. And it's changed a little bit. The insurers have gotten, the key insurers have learned, two things have happened. They'll tell you they've learned more about, the comorbid, which is the combination of conditions that are far more likely to lead you to need care at an older age. And indeed, they have learned more. Their experiences learn more. But let's be honest, kids. They also can be a little bit more selective. It's not like you as a broker have a choice of 22 companies to give your business to. So they can be a little bit more limiting. Clearly, and if you go to that webpage, you'll see the chart, clearly you get to 70, nearly half of people who have applied, which means you as an agent and broker thought enough to take the time to submit an application, because you're not just wasting the client's time, you're wasting your time. So you said, well, let's give it a try. Let's submit this application and see if we can get it. By 70, half of those people are already being declined. So there's a real issue. So, yes, you're seeing growth of alternative options, and certainly the producers that I know and that we tend to help out and work with, and I talk to on a regular basis when clients, when there are issues, are selling more short-term care insurance. And I will tell you, if you're not familiar with, basically it's the Aetna recovery care product. If you're a long-term care specialist and the Aetna recovery care product is available in your state and you haven't learned about it, you are missing the boat, because it is not a slam dunk in terms of coverage. They do health underwriting, but once you're trained and really knowledgeable in that product, I see a lot of some specialists, I won't say a lot, who are having nice success with it, so obviously it fits well there. Short-term care, the thing I would tell everybody to watch for in the coming year, it's sort of a surprise, well, not really a surprise, but Medico, which has or had a short-term care product, has gotten into an alliance with AARP. What that means is they will have to pretty much market aggressively, I would think, because AARP, wants to hit certain numbers that derive income for them, and so will Medico. That will want to hit some numbers with that. So you could start seeing, some increased awareness for short-term care. I don't know that will bring any more insurers into the fold. Maybe it will. Insurers tend to move rather slowly, but there are certainly opportunities there, and certainly on some of those other products that can address concerns and needs. There are always opportunities.
That's great, Jesse. And the market does tend to be moving in that direction with more entries. And I know that at Golden Care and AIM, we've been very instrumental over the years working with Integrity on developing products for the marketplace that are, whether it's a short-term home care or whether it's an alternative for LTC declines, that's helped us to increase our placement rates, because underwriting, as you said, has become very problematic at certain ages, and you have to have a solution. And so it's the gamut you have to be able to cover as a LTC individual who's out there having the conversation. You've got to be the one that solves the problem. So the last thing I would just ask of you, if you wouldn't mind, if there's any, you've given us some great, candid, and very clear and open communication this morning. We really appreciate it. So if you have any final takeaways or advice to agents in 2020, boy, it's hard even to say 2020. It's already here, as Tom said, and we're up and running. But with your knowledge and expertise, and also I know we can also just put back up on the screen the invitation on the MedSup free day conference. So I'll let you have final.
Yeah, I'll even let's get, okay. So there is the MedSup website, MedicareSupp.com. MedicareSup.org, and I'll address the long-term care. And that's the shortcut to the free day. But once you get to MedicareSup.org, click on the conference tab, and then you'll see everything there. That's number one. Number two, if you are interested, we announced this week that we would give. It costs, the regular registration for the full conference is $650, and generally the conference attracts about 900 people. The full conference is not an agent conference. The free day is an agent day. The full conference is really an industry conference. Are there agents who come? Absolutely, because this is the one place where you can network and really be with the entire industry and hear from them at all levels. So, but we understand agents are working with, it's one thing when an insurance company sends 20 or 30 of their senior executives, and even though they watch their budgets too, but for agents, I always try to do what I can. So this week we announced a scholarship rate, basically, for agents. So I'll give you the referral code. Take out a pen in a second and write this down. If you decide, we're going to limit it to 20 agents, and so it's once 20 people have used the code, it's going to be discontinued. If you decided that you wanted to attend the full conference, when you register online, the referral code that you're going to enter is 202020, so 3 20s in a row, 202020, and click the apply code. That will take your conference registration down to $399. That is limited, as are hotels, etc. This is a great event. So, one, if you know, and that kind of, I will tell you, I talk to a lot of agents. A lot of agents have looked and said it's hard to specialize in long-term care insurance unless you have some access or resource that's providing you with leads. Then you can still spend most of your day specializing and talking to the clients. If you're just a traditional broker, yes, I think you're going to have to broaden out, and certainly more traditional brokers that we're talking to are starting to focus on Medicare products. And once you're talking to the Medicare person and you have their trust, whether you sold them a Medicare Advantage or a MedSup or a PDP plan, then it's a little easier, just like that financial advisor, to open the discussion. So I get calls, periodically. I don't get many anymore. I want to be successful in long-term care. And my answer is, well, then the most important thing to you is where you're going to get a steady lead flow, because you'll go broke, trying to advertise or do direct mail. So, you got to today see what products people are buying, etc.
That is so true. And at Golden Care and AIM, we've got many of our strategic partners have avenues that can provide those lead opportunities, as well as those who want to remain independent and just be in the brokerage space. They can reach out, and we can certainly be a resource. Jesse, again, I want to thank you so much for sharing not only your insights, but giving of your time this morning. And what I'd like to do at this point is turn it back over to Tom Randall to see if there is questions, if we have time for that. And I know that you got the special drawing. So in addition to Jesse giving away that referral code for 2020 for $399, which is a heck of a deal, and having been to the conference, I can tell you that it is.
By the way, that's for agents, not for FMOs.
Yeah. So
nice try.
So, Tom, back to you, and any final thoughts, and also the announcing of the raffle.
Absolutely. Thank you. First of all, thanks, Dennis, and really special thanks to Jesse. You did a great job, and That certainly is expected because you have so much knowledge about this industry and you really are out there as an advocate for all the agents in the field. So we really appreciate all you've done. I did have a bunch of questions that were typed in, and I did answer most of those. Most of them are more individualized questions, so I answered those. I did have a couple of good points. If you don't mind, I'm going to jump in. One of them, and I won't give names in case they don't want their name scheduled out, but an agent called in or typed in that talking about the Alzheimer's issue, and we all know Alzheimer's is such a huge, huge part of what we do in the long-term care, the senior market or longevity market, whatever you want to call it. And Alzheimer's right now, 27% of the clients who used their policies 20 years ago are for Alzheimer's, and basically is just pointing out the fact and thought that we should really stress that support the Alzheimer's organization. And you know what, Alzheimer's disease now is like 52% of the policies out there are paying for some type of Alzheimer's care, and there's a lot of volunteer caregivers as well. So we know that that's a huge issue out there. So thanks for pointing that out to the group. The next one, we had somebody just talk about the rate increase issue and that there is a lot of support tools out there, the 2014 Society of Actuaries, the LTC rate stabilization regulation that's out in effect. We have all that information at Golden Care and AIM. We have a great Brokers World article out there from really talking about some of the things Jesse talked about, that these actuaries nowadays have a lot of the tools they need, and they have 70 times more claims data out there to be able to create these policies today that are very, very stable compared to what the bad press long-term care and those legacy blocks of business have. So just thank you for Gary for pointing that out as well. And then we just talked about, a couple people brought up things about some of these short-term care products out there. I'm not going to list products by name, but we do have all those products available for AIM and Golden Care, and we can really be a great service for you. So that being said, I don't have any other questions that were typed in here, but I do want to, again, extend a huge thanks to Jesse and a huge thanks to Dennis. And I do want to tell you before I give you those raffle winners, make sure you take the next step. If any of you are on this call and you're not yet appointed, remember, we can't help you. The first step is up to you. We can't help you if you don't let us know we can help you. So call AIM, numbers on the screen, call Golden Care. It doesn't matter which one of us you call, you know how that works. We're great partners. We're teammates. We're out there helping you in the field. We are Integrity LTC, and we're proud of what we do because we know that growing Americans out there with that aging generation, people living longer but sicker, somebody's got to help them. And I have it in my blood, as you know. Somebody's got to help them, and we really rely on agents like you to go out there, roll up the shirt sleeves, and help those folks. So thank you for all you've done in 2019 for our agents who are existing, and let's make 2020 a great year. That being said, I really want to quickly announce, I know we're getting close to the 45 mark, the winners of our raffle, and this $50 winner was to Gary Prosnick in Wisconsin, and the last four of your phone number, 9853. And I don't think people care if their last name is announced, so I'm just going to announce it. The $100 winner was Linda Wong. Congratulations, from Texas. The last four of her phone, 7705. And you'll get a text, by the way, as well. That was $100, Linda. Good job. And finally, the $150 winner was Bill Young from Idaho, and the last number was 1171. So I do want to let you know you'll get a text showing you that you won, and it'll tell you the next steps you got to do to make sure you get that money in your pocket or that Amazon card in your pocket. And we do want to thank everybody for showing up today. And again, a huge thanks to our panelists. If you have any final words, anybody, feel free now to jump in. Dennis? Jesse?
Oh, I wish everybody a great year.
All right.
Yeah, thank you
so
again,
much.
Jesse, and it was some great insights, and we hope everyone takes this information and applies it, as you said, Tom, and go out and try to help as many people. We know helping more people equals more opportunities for you to be a resource. So thanks again.
Perfect. Thanks. Give us a call at AIM or Golden Care, and we're here to help you. Thanks again, Jesse. Thanks, Dennis, and everybody have a great day.